All right, so welcome to another video. Today we're going to take a look at how inflation is picking up and a little bit some insight on how this is picking up some speed and steam just due to Ukraine and the Russia conflict. So I'm trying to do my best to give you a little more insight on some news and some takes here, and we'll just take a look at some charts as well. So keep in mind, none of these are recommendations to buy, sell, or trade anything, just my own personal opinion. If you want to grab my opinion, definitely check out the tradersfly.com website. And you can also take a look at our Discord, which is the link in the description below, where I share with you some tidbits as well for things I'm looking at. All right, let's get things started here. So inflation's been picking up quite a bit, and if you've seen some things, with the gas prices here recently, they definitely are picking up some speed. There's just surging gas prices all over the place. So as we just take a look at everywhere, and we look at gas prices in the USA, they're starting to pick up, $4, $5, $6 a gallon, and in some cases, people are getting nervous about that, especially if you don't have a lot of disposable income. That can definitely be a little bit of a problem. So they're picking up speed, and in some places in California, $9.99. I've seen signs where they also put an arm and then a leg. They just joke around the gas stations and so on. So, but you seem to go through those periods fairly frequently when there's a rise in inflation very quickly. I've seen it in the past as well when they're low on fuel. They typically do that. So again, it's a huge consumption. I think electric cars and those things will pick up over the next 10 to 20 years, and we may be less dependent on that. But for the time being, it's significant. And when you have less disposable income, let's say you're making $2,000 a month, and now you add 10% or 20% more to your fuel expenses, especially if you're driving to work, that can be a huge problem and issue. Now, if you're working at home, probably not a big deal. Also, if you're, making, let's say, $20,000 a month, also probably not a big deal. But for the majority of people, it does become significant because you're spending more on just basic living necessities and less for other things. Okay, let's take a look at U.S. Inflation here. This is Trading Economics, and you can go ahead and just pull up some different charts. I'm going to show you this one right here. If we just look back on the U.S. Inflation here, and you can go back about 10 years, you can see we're picking up some speed fairly significantly right here. This is going in from 2020 to 2022. You can see the rate is really, really quick. So when we go from almost 0% to 8% inflation, that's starting to get some significance there. In the past, what we've done is we just kind of trucked around about this 2% rate, and that 2% rate is people were kind of okay with it. So it's just like, hey, we're just moving up a few pennies here, a few pennies there, and it wasn't really a big deal for a lot of people because prices do inflate with time. That's just normal and natural. But once you start seeing this big spike, it catches attention, especially when you catch some big attention. Now, this is kind of a 10-year. If you go to the 25-year, you can see even then we haven't had too many instances where it was fairly significant here. Even around, what was this, about 2007 or 8, we've had a little bit of a peak, but compared to where it wasn't that significant. So again, picked up some steam. If we go to the max, you can see that we are kind of not approaching quite the max, but there's only a few times in history over the last about 100 years or so, about 4 or 5 times where we are getting into those levels. So you can see that right now we are picking up speed on inflation, which means the costs are going up exponentially. You have to raise prices of, let's say, lumber or oil or gas prices, and that trickles down, which means now you can't afford to buy certain things. So then what is it that happens? Then, people have to raise rates for employees because they can't afford certain things. And then, like, for example, then you might have to raise prices on products that maybe are not even directly raw materials because now the employees have to get raises, but you have to raise prices on other things. So it's a really weird interconnected, it's all tangled together because we're all, through synergy, it really does all connect. So the inflation is up there and it's picking up some serious speed when you really look at it relative to history, and this is fairly significant. If you look at kind of inflation rate, you can browse into different countries. The United States, let's see if they go USA, United States, this is from another site. macro trends. United States here, inflation right now in 2020, they haven't tracked the 2022 and so forth, but you could see here in the 80s, it was fairly significant here as well. But one country I want you to pay attention to, here's Venezuela, for example. You had almost 254% inflation in 2015. So you look at this, huge. If you remember the good old days, where we have the inflation of Hungary, inflation time frame, it was just nuts. Hungarian inflation rate 1986 to 2026. But if you look at kind of historically, on some of the images and just the history, right here, they had some historic inflation in was it the 46, I guess, 19, where it was like a million or $500,000 to buy some bread. I'm not a historian or anything like that, but I know they had some of the worst, like just like Germany as well. They had some significant things. The post-World War II hyperinflation of Hungary held the record for the most extreme monthly inflation rate, 41.9 quadrillion percent. Look at that for July, amounting prices doubling every prices doubled. So if you had a house for let's say you bought a house for $100,000, then it doubled in just a few hours, in just less than a day. Now it's 200,000. Then again, the next day it's 400,000. Then again, it's 800,000 in 3-4 days. It's crazy. And I know there was even comics here that were created. But anyway, there was, let's see, what was it? Hungarian 500,000. Yeah. So just to buy some bread and stuff, they yeah, 5.85 billion pango, Hungarian. When they just using a bunch of money just to light their cigarettes. So, and then here's, graphics and stuff that just sweeping money off the streets because it was just pretty much worthless. Anyway, point being is inflation does pick up stuff. There's one thing that's pretty cool about the inflation when it comes to purchasing power. I like the Big Mac index. It's pretty cool and fascinating when you start thinking about, hey, what is it that your money can buy? So one of the things to think about, this is like the purchasing power. They usually use it more for currency. So, for example, comparing the burger, because the price of a burger or the materials like lettuce, tomato, bread is relatively the same throughout the different countries, right? So you have all those the same, and the burger is very similarly made. So they use kind of McDonald's that's all over the place, all over the world. So if it costs, let's say $3 in China or $7 in the US or vice versa, then what is it that it can buy you there? So they kind of look and compare this on a currency basis. But in the past, what I've also seen is that they use these Big Mac indexes to also see how many hamburgers does it cost to buy an average home, in the different countries. And sometimes that's interesting because sometimes it could be like 70,000 burgers. It takes 70,000 burgers in that currency to buy an average home. In another currency, it may take 250,000 burgers. So it just shows then in some areas, it's actually your money's worth less, or it just takes more capital to actually buy a home or buy an average car or that kind of thing. So this is kind of interesting. If you've never seen it, just check out the Big Macs index and you could read a little bit more about it. But anyways, so what's going on here with everything that we've got with this inflation rate that's picking up some speed, just overall inflation was picking up some speed. But now what happens is when we have this Ukraine debacle and Russia exports, when you start seeing like all the things that they export and do, and just with the oil, the gas, I mean, they do a bunch of stuff in diamonds back when I was in the diamond investing business as well. But you start looking kind of at just overall their materials, and you start seeing, this is why some of the stuff like these companies were skyrocketing very quickly, because these gas oil companies were and energy companies were picking up some speed. Now they're kind of pulling back a little bit because they were extended. But this is where a lot of these things added fuel to the fire. So when you look at stuff like the XLE energy sector, now energy prices have went up, and they went up quite a bit. And if you just look at this ETF, and you can just see, okay, in 6.6 months, this thing went up 70%, 70%, all right? So that's fairly huge, and this is why other things move as well, like this USO. Not that I'm a huge fan of it, but, you trade it here and there because trading is a lot different than long-term investing. So here, this one's up 88% just since December. So granted, we didn't get into all of that Ukraine war right, till probably about February where things really picked up. But you could see this was already picking up some speed here. We're picking up speed, and then we just accelerated. And when you get too much acceleration, it does pull back to kind of the average or a mean, and it may even overshoot, and then we'll kind of maybe get back to this line. But my point is this is the United States Oil Fund, but you just look at just energy overall in general from an XLE standpoint. You can see that we're just continuing to kind of truck along this way. And now that you can't get as much fuel or oil from maybe Russia, or some of those trade relations are now being broken, it's going to add more problems to just the overall world. It'll start stressing a little bit more, in prices, and you have to absorb that throughout all kinds of different countries and trades, and then it inflates other prices. Like for example, now it picks up speed for the labor in that industry, and then now the people that are buying the oil, they have to increase rates and prices, and then those people raise rates and prices, right? So maybe the manufacturers of the tools, the machinery, have to raise rates and prices as well. So it just all trickles down. It's kind of like a trickle down effect, and you can start looking at some of these graphs and pictures, but just overall, there's a lot of inflation happening, and now when you're cutting off like one thing, then another, then another. So let's say, we've got this global world going on with all these different countries, and different countries are, hey, this country's trading with this country, and this country's here, and that country's trading here. So all of a sudden, what you do. Or what basically happened is that what you're doing is you're kind of cutting off ties in one spectrum. So let's just say this area now is dead or something like that, or this area is now dead. So that one artery is now done. So they have to kind of go around. And just similar to how you have the no-fly zones across Russia or other than NATO countries, and it just then what happens now? The airlines have to go around, and that uses more fuel, and it just increases the prices of airplane tickets. So it all really works together in that way. Now, again, from a trading perspective, if you're trading 60 days or less, it doesn't matter as much. Day trading, swing trading, a little bit lighter trading, kind of in that way, it doesn't matter as much. From a long-term investing standpoint, you have to recognize that the growth is probably going to be a little more limited, maybe for earnings for some of these companies, but they could pick up some speed in other areas or markets and look to open up to new divisions, and that can actually fuel the stock market even more, because now what's going to happen is investors trade based on future expectations, right? So even though maybe right now the earnings are not great, but because the future projected outlook now, they might have a new plan, new idea, new vision, things they'll be developing to compensate for those losses. That could be great. And that's where things could start picking up speed, which is, for example, like if you look at McDonald's, we were selling off fairly significantly because, partly because Ukraine, Russia, and they're closing down a bunch of stores. But this could add fuel later on, maybe not this week, maybe not next week, but it could add fuel back up to getting back into higher prices, because now they could say, hey, well, we're going to add, different stores or different divisions, or create a little bit of a different menu, or add more things to our menu, or, they could be doing other things. And this is where when one door closes, another window opens, or vice versa. When one window closes, another a door opens. That's usually what happens in these kinds of situations. It just sometimes takes time. So right now we're kind of basing in some of these stocks. You look at 220 here in McDonald's, and you can see we're starting to, again, climb higher, oversold. It takes time. People were panicking, dumping, and that kind of thing. Starbucks as well. You could see here at the 80, it's starting to, look to bounce here. So when you get oversold, people will start nibbling. Longer term investors will say, hey, it's starting to get into a good price. This price was about 120. And that's what you'll probably start seeing, is that from a longer term perspective, this will be a blip on the screen. But yeah, for the short term, it may be painful. And this is one thing you may want to keep an eye on and watch, is that a lot of these stock charts, even these other companies like a Zoom or a Facebook here, Meta, that got oversold here just partly from earnings, but now Russia closing the door on Instagram and Facebook and that kind of thing. Yeah, it will take a hit, but they can recover, and with time, things do continue to inflate. So right now you've got this pullback. It's pretty significant, but it also can be a good opportunity because from a lot of recessions, from a lot of pullbacks, they create wonderful, wonderful opportunities. It's just you don't know when the bottom is, so make sure you understand proper allocation when these things pull back. So don't go in too big all in one day, all at once. Spread it out across a couple weeks or months if you're looking to allocate as a long investor, and that should keep you a little bit more safe from diversification and over allocating in one spot or area. Anyway, thanks for joining me. Hope you enjoyed this video. Definitely stop by our Discord channel there. Links in the description. And you can also check out the Traders Fly website. There's a ton of freebies there. And we've got a lot of live classes here that we've been doing and will be doing and have done, if you want to check those out as well. More so on the option side, because that's kind of the core and focus for active trading that we deal with. And you can take a look at the other channel that I have on YouTube, which is Traders Fly. And there's you know, a ton of other great videos there when it comes to trading options and option spreads as well. All right, thanks for joining me. I will see you guys next time. Feel free to subscribe. Take care and have a great rest of the week.